Hi, everyone, and welcome to the third edition of the weekly Venture Scanner Roundtable. I'm Nader Ghaffari, your host and CEO of Venture Scanner. Today, I'm live here at the UC Berkeley campus. Sorry for the background noise. I'll be speaking to some corporate executives who've come into the campus to learn about entrepreneurship. Just to brief you guys on the format of the weekly roundtable, as we've discussed weekly, it's a quick around the table where each of the analysts who cover a sector will give a quick insight that they have gleaned over the last week, and we'll open it up for discussions if anyone has any inputs. And with that, I will open it up, and we'll start with Devin Christensen, who covers the digital health market here. Devin?
Thanks, Nader. Hello, everyone. So digital health. Just wanted to touch on just really kind of a funding item. Funding is definitely heating up in digital health, and one case of that would be last week. Proteus Digital Health. They raised a $120 million round, which is both one of the largest of 2014 for a digital health company, and additionally, largest round for a digital health company in all of 2013. So there's some good momentum there, and this round really solidifies their leadership, their leader status within the digital health sector, and kind of puts them out there as a star company in the sector as well. Real quick, as a side note, I think that what's unique about this company in particular is that they've created a new category of product called really digital medicine, which crosses into the IoT sector as well, and additionally has applications in biotechnology, and in real basic form, they have an ingested medicine that is able to communicate with the internet. So I think that that's pretty cool, and that really speaks to the Internet of Things application as well. But anyway, what this means, I really think that this large funding round is really a strong example of investor confidence in the growth potential created by both digital health and Internet of Things companies. It'll really be interesting to see how this fire spreads in both sectors going forward.
Devin, who are some other competitors in sort of the digital medicine space, and what kind of products are you seeing in this cluster and category?
Yeah, within digital medicine, nothing strong comes to mind. Proteus has really led the way in terms of putting themselves out there for this ingestible technology that then will communicate back with a sensor, which then will you can aggregate that data into another database. So nothing strong comes to mind in close competitors, but I would imagine that more will come into this space as the technology gets developed further.
Great, rather fascinating. A digestible Internet of Things is really what it is.
Yep.
So let's move on. Next up on the roundtable is Nate Pacer, who covers the Bitcoin and connected transportation markets.
Hey, how's it going? Today I'm going to talk a little bit about the connected transportation market. The thing that I want to look at today is what I'm going to call the big thing that I think is the first killer app in that space is the usage-based insurance market. Essentially, it's taking a small telematics device, plugging that into your car, getting the data sent to an insurance provider so they can tailor a policy specific to you. And the reason this is interesting for people who cover startup markets is that I really feel this is an area ripe for disruption. As people learn how to drive safer, the policy rates are going to go down. That's going to thin out the margins, and these large insurance companies with lots of overhead aren't going to be able to compete as well. So really small companies like Metromile and similar players of that, I think, are really well poised to eat up a lot of the automotive insurance market moving forward. And I think this is a real sort of under the radar type of thing. It's sort of not sexy. Insurance is usually thought of like banking, as commercial banking as sort of lame and old school. But this might be a way where technology really creates a whole new platform for companies to go up and create new services.
That's really interesting. So what we're going to start to see is a lot of these telematics companies, Nate, will be sending data to the insurance providers, who will then leverage that, or this new class of insurance providers, who will kind of tailor based on the type of driver you are with true actual data. And in some sense, really transforming the way the business is done today.
Yeah, definitely. And I think a nuance there is that I don't think you're necessarily going to see a telematics provider be front and center. I think they'll sort of white label some real basic solution, and that the majority of the work will be done by an insurance company that just sort of buys a piece of hardware from some OEM. So that's sort of a nuance there. But I think because of the regulation and stuff, I think this would be the insurance company will be sort of front and center in the process.
Great. Let's move on. Next up is Nathan Suhu, who covers a handful of markets here, including 3D printing, future of television, and the retail technology sector. Nathan, what are you touching on today?
So I actually want to talk about future TV this week and get away from retail stuff. But I want to just talk briefly about connected devices and set-top boxes. So the fight over the living room has been ongoing, right? There are quite a few options, and consumers have quite a few choices at pretty good price points. Right? We have Roku Box, Roku Stick, Chromecast, Amazon Fire, just to name a few. And as of yesterday, now we have one more, PlayStation TV. Right? So yes, this battle for the living room is going to keep intensifying, I think. But for those that don't know what the PlayStation TV is, it's basically a system, a standalone system, $100, same price as the Amazon Fire. It's going to allow you to stream games, stream TV, or stream videos, and play your PlayStation 4 console remotely on a second screen. Right? And I think this is interesting for a couple reasons. One of them is that Sony is pervasive in the house, right? They're known for gaming, so they're going to have that edge, right? I think the PlayStation 4s alone, they've sold 7 million globally since it launched in November 2013, right? So they got the hardcore gamer market captured to some degree, and I think that's going to be interesting paired with the Sony TV service, the internet TV platform that they're building, right? If they can get that launched, they have now an instant distribution platform into the PlayStation 4s, into these PlayStation TVs, and that just brings the ecosystem a little more closed loop, right? So Amazon Fire is doing that on the commerce side, and just that this will be very interesting from a gaming perspective, right? So they've got all the games, now they're going to pair it with the internet TV, and I'm cautiously optimistic. So that's it.
Thank you, Nathan. Anyone have any comments on that? Great. We'll be looking for some insights around that from you, Nathan. Possibly a blog post on the subject in the coming weeks.
Yeah, definitely.
All right. Next up is Wayne Wong, who is our financial technology analyst. Wayne, over to you.
Thanks, Nader. So an interesting piece of news last week is LendInvest, which is a P2P lending site focused on UK real estate, is rating a secondary market for P2P loans. The thing about the secondary market is that, as a whole, the P2P lending space is still relatively new. In terms of secondary markets, Lending Club, Prosper, and some of the bigger UK P2P lending sites have already had the secondary markets for some time. But it's interesting to note that what we're seeing with the P2P lending space is a new industry that is propping up. First of all, you have your platforms. Now you have your secondary marketplaces. And who knows? Maybe in the future we would need specific credit rating agencies for P2P loans. We may need a Bloomberg for P2P loans. Just this year in February, Eaglewood was the first company that successfully securitized P2P loans, and it's going to bring about a host of questions in terms of regulation and how do we protect the interests of consumers and retail investors. So this is one space that I'm doing a bit more research into, and it'd be very interesting to see how this would shape the financial landscape going forward.
Wayne, P2P loans, it's not really anything new per se. Lending Club and Prosper have been at it for some time. What specifically do you think is the new trend or the new movement that you're seeing?
Well, yes, you're right. P2P loans have been around since 2006 when Lending Club and Prosper. Yeah, I mean 2006 Lending Club and Prosper started around 2006. So definitely P2P lending isn't something new. But interesting trend is we are seeing a lot of institutional investors coming in and snapping up the loans and such that Lending Club and Prosper actually have to introduce speed bumps to prevent institutions from using algorithms and an automated way of buying out the loans. For Prosper and Lending Club, they are incentivized to leave a portion of it open to retail investors because for retail investors, they tend to be more sticky. In the case of a downturn, you won't see retail investors fleeing as fast and as quickly compared to institutional investors. So the institutional trend right now is something to look out for, especially with the securitization of these loans.
Okay, that's rather fascinating that we're starting to see the likes of hedge funds you're saying are moving into these P2B spaces and sort of turning bundles of these loans into securities essentially and gobbling them up.
Yes, that is right.
Which actually moves fundamentally away from the reason some of these platforms came to exist, which was to provide cash to enable consumers to be making these loans. That's an interesting trend. I guess we'll be watching that. Let's move on. Last stop here on the roundtable is Masami Kato, who covers the Internet of Things. Over to you, Masami.
Sure, thanks, Nader. So I think I'll talk about this phenomenon in IoT space of nobody delivering their products on time. So I've been scanning a bunch of companies, and when you find companies that say, "Oh, we were going to ship January 2014," the chances are they haven't. And on their Kickstarter and Indiegogo page, there's updates that are maybe a month old. The consumers are angry. They're just putting a lot of bad comments on it, and it's a pretty big issue in IoT. And it's a shame because what this does is it does not allow entrepreneurs to iterate their products, make it better, like a software or mobile app, continuously make their products better, but they have to kind of look backwards and solve problems before they can even ship it. And sometimes, if they're a year late, their idea is already old. So I think I'll shed some light on how a consumer electronics company that I used to work for used to do this production validation because so few of people in the Bay Area have not worked at a hardware company. So first, when we launch a new product, say a new PC, we'd make a couple hand-built prototypes, and that's what we used to kind of validate the concept. And then we do like a run of maybe 30 units of hand-built design validation tests to kind of work out the design kinks. And then we run about a 300-unit production test to work out the kinks in production. And then we go to market. And as you can probably think, that's a lot of money, a lot of people, a lot of time, something that startups probably cannot do, probably don't know how to do. And I think the question is, how do we kind of get those kind of processes, into these startups, on Kickstarter and Indiegogo? And I think one idea is guys like Foxconn or like in Taiwan, or the Japanese makers or Chinese makers who already have expertise in that area, maybe doing an incubation initiative, maybe doing a kind of production lending services to these startups to kind of grow the ecosystem as a whole. So that's kind of my thought for the week.
Who are, Masami, do you have any sense on who the current bulk of hardware manufacturing side, who are they turning to for their large-scale manufacturing beyond prototyping phase? Who are the top players that they're turning to bring these products to market?
I think the question right now is there's very, very few IoT companies that have reached that mass marketing phase, second, third product. Probably Nest is is one, Fitbit is one, and once they reach that stage, I'm sure they have a pretty good relationship with EMS guys in China and Taiwan. Likely Foxconn, because because Nest, the guy used to work for Apple, and they use Foxconn a lot. But the reality is, a lot of these companies, they either fall on their first or second product, and they have not reached that mass production stage. I think that's where we are right now.
But I think it's absolutely true that most entrepreneurs in Silicon Valley don't come from the production and hardware manufacturing space and don't know the ins and outs of what it takes to bring a product in some volume to market. And so some sort of platform that that they could turn to could be very powerful.
Definitely.
All right. Well, this brings our weekly roundtable to a close. Again, you can always find our scans on all these sectors and others at venturescanner.com. And you can always email me for any questions or further information, nader@venturescanner.com. We look forward to seeing you next week. Have a great day.